The moment that we believe success is determined by an ingrained level of ability as opposed to resilience and hard work, we will be brittle in the face of adversity. Joshua Waitzkin. My friends, it's all about resilience, about hard work. And we only ask for 10 to 15 minutes each and every day following these charts. Don't worry about your level of ability coming in. You will learn by doing OJT, on the job training, and it's fun. I do this every day. Bring this to you for free because I love it. Makes me a better trader. I'm the one that actually gets more out of this than anyone. Why? Because I have to think about what's going on. I have to follow these charts. I have to do it each and every day in addition to all the other things I do, my own trading, my own special stocks and ETFs that I follow. But I do these and record this for you, do the trainings. And by the way, we've got a great new training for you today. If you're signed up and you get our emails every day, you go to chartingwealth.com, sign up for free. That list is never spammed, never shared. And what you will receive is, of course, our trainings that we put out, the daily reviews, the weekly review and forecast, all sorts of helpful stuff. There is a new training today. It's in the show notes. Check that out. You can also go to chartingwealth.com, look under the training section, and you will see it's basically discussing the reason we stay away from complexity. We use Occam's razor to keep things as simple as possible because simpler is better. It's more accurate. It's less likely to break down. It's actually a part of a chapter in our new book. So go ahead, take a look at it, see what you get from it. Let's jump into these charts. Stocks are mixed. Bonds, gold are down. Bitcoin up just a little bit. Let's jump first into the S&P 500. That's down a little bit for the day. If we look at the half-day chart at the bottom right-hand side of the screen, you can see 3 half-day candles. So that's a day and a half of some down movement. We're still in the green here. We had this week last week. Now, if you take a look, you can see the volume was lower than it had been, 4 weeks prior as things were slowing down and then moving down. So there's not a lot of impetus in this up move. Maybe it'll gain some steam this week and you'll see it take off again. But again, not super powerful at this point. This is not even a fifth of that prior candle. So we'll keep an eye on things. You can see here on the 2-day candle, that first 2-day candle was Tuesday, Wednesday, then Thursday, Friday. This latest one is just Monday, but you can see where it has fallen off. Much smaller candle. It's just the first day, but it's not even half the size of the priors, and it hasn't pushed up higher. So the week is starting off weakly on the S&P 500. NASDAQ 100, it is up just a fraction, 0.13%. Same kind of thing here, although the candle's a decent size larger. You can see again a slowdown, but up closer to where things had topped out before. You can see we're down on Friday afternoon and then spinning on Tuesday morning. Forgive me if I said Monday because, of course, Monday was yesterday a holiday. I'm on Monday mode, though. That's what this is like. So, and what do we see going on with this this afternoon? We see a bit of a green up candle, but not reaching the high that things reached on Friday morning. Now, I've got myself a bit flustered with the fact that it is Tuesday, not Monday. So we will continue to watch and see as this Tuesday, Wednesday candle finishes drawing. That'll be tomorrow on the 2-day chart. So again, starting the week off weekly with the up moves on both the S&P and the NASDAQ 100. Let's look at where we are on 20-year bonds, starting the week off down after a skinny week last week. Let's take a better look at this. We can see that we've got a spinning top. Let's blow it up a little bit, take a little bit better look. You can see there was a little bit of down move there on that weekly candle, mostly up, but things just sort of petered away and then started off down 1.40% for the week. You can see that volume was just a little above average last week, actually lower than those prior down weeks. But that up movement just sort of died. And we did see, and again, I think it's important to note that on the candle itself, there was a little bit of down move there, continuing to sit on the weekly candle. And then things rotating over as the week began. We can see first day of the latest 2-day candle. Maybe we'll have average, it's already about half of what the prior volume was, what the average volume was. We'll see if indeed things are going to continue down. 2 days of down movement. We can see the Friday candle, which is where that Thursday, Friday 2-day candle finished drawing and the new one started. So again, we will keep our eye on bonds, but bonds, again, remember how bonds got just crappy right in here, popped up and then sort of died. Same kind of candle you see here, you see back on April the 23rd, where it gave us hope of an up week and then rolled over, slid sideways. Then we had pretty much a doji, little green up candle, another spinning top down, then another little attempt to move up and then rolled over. Again, not like in bonds so much these days. Looks like, though, overall, the movement in bonds is down. Once we bounced off the third time, well, let's see, we bounced off here. We bounced off here. Well, we started bouncing off there back in mid-December, then popped up, sort of slid along starting in mid-January to the end of January and down, popped up, hit the ceiling again in mid-March, then toward the beginning of April, and then rolling over and away since then. Some sideways slides, some bump ups, nothing clean, nothing to make you feel good about 20-year bonds at this point. Again, understanding overall mood tends to be down. Now, let's look at where we are with gold. Down for the day, 0.82%. You can see Friday afternoon, the weakness started on Tuesday morning, and about the same in the afternoon. Gold after trying, and again, we're still green, so we'll wait, watch, and see. Got some weakness here on the 2-day, but it is above the weekly trend line, so we'll keep an eye on gold, see if it'll turn around as the week goes forward and keep moving up. Lastly, take a look at Bitcoin, up for the day, just barely 0.24%. So again, 0.25% up. You can't even see it on the half-day chart here. You do see starting the week off with some down movement, which is fine with me. I want to see Bitcoin continue to pull back. And then when it does take off moving up, I'm hoping it'll be a clean crossover going up. But again, consistently, at the end of the year last year, Bitcoin bottomed out, popped up at the beginning of the year, sideways and down, popped up again in mid-March, and then sideways and down, popped up again mid to late June, and then sideways and down. But consistently, is hitting higher highs. So we'll wait, watch, and see. That's where we are. Hope you enjoy the new training that you'll find at chartingwealth.com. If you're a subscriber, it'll be in your inbox. And if you're not a subscriber, go to chartingwealth.com, sign up for free for the daily and weekly reviews and all the special trainings. Doesn't cost you a thing. Again, that list is never spammed, never sold. God bless, my friends. All the best from the whole team at Charting Wealth World headquarters.